There has been a lot of talk about banks disappearing and the marketplace being redesigned. How do you see decentralization changing the financial industry? And could you show us how an ecosystem token is better than equity?
Okay, so the enterprise model that came after the industrial era, really, was a really good invention. But of course, it's improved by the token. And that's much more interesting than blockchain technology itself, is how we can use a token and digital assets, really, to build a whole new business in a better way. And the way we have done that, of course, is something I believe you can apply to a lot of businesses. It's the kind of the future of how you build systems. And we call it ecosystem tokens, right? And that's the next thing that's going to come. So if you just look at our business, which is kind of a platform business, if you come to us from Goldman Sachs with a team of 3 and want to set up a hedge fund, the main thing is to think about and consider your investor. You're going to make him comfortable. And how do you do that? You got to have the best providers, tier 1 providers. That's how you attract the big ticket investors. And then you got to have flexibility and a squeaky clean structure. And you got to keep your costs down. On one side of the platform, you would have all the providers. So you have, a great prime broker counterparty that you can trust, a bank, brokerage, and so forth. You have one of the top 4 auditors, Pricewaterhouse, Deloitte, those people. You got to have the best fund administrator. You got to have a really good lawyer. You got to have a good structure in the prime brokerage, order routing side, fixed line counterparties, the whole enchilada on the provided list. On the other side, you have the regulators, who of course have a mandate to protect your investors. It's like anything else in the world. You're really selling trust with alpha and performance. So the regulators, of course, are going to watch your every move and basically make sure that you conduct clean business. Now, you are in the middle here. So of course, you want to run this dynamically at a low cost. And all these guys today are looking at blockchain technology. See how that's going to improve the business. So if you take this platform business and you look at that and you think into the future, so you think 10 years ahead, how is this business, how is that hedge fund platform going to change? And that is going to give you an answer, an indication at least, where the financial industry is going to go. How is that going to be affected by decentralized ledgers, technology, artificial intelligence? 10 years. Talked about audit, say Pricewaterhouse. So what is auditing for a hedge fund? Well, if it's done by people, you get it 4 months after the end of the year. And it's done by a huge cost. And it's done by people, and people make mistakes. That's what we have Madoff. Now, if you know decentralized technology, if you know the blockchain, and you put it down on a decentralized ledger, it's done by a machine. Now you can get it live every day at no cost. There's no errors here. So the question really is, how long time is it going to take before the regulator sees that this is really to protect the investor? This is better for the investor. Now, they're far from that today, of course, so you're going to have a traditional space for a while with the regulators, and you're going to have a crypto space. And at some point, traditional is going to collapse into crypto. But for us, when we plan the crypto side of it, we have to think 10 years ahead. So what we do is take the auditing component, put it down on a technology platform. And this is what we're going to do on each component here. You can use the same argumentation for all of these components. Take banks, same thing there. Blockchain is really communication technology. So that sure works better in an open communication environment where everybody's using the same ledger technology. Standardized banking services, of course, are going to be taken down and put on a blockchain as well. Doesn't mean that the bank is going to disappear, but they have to transform the business. They have to be something else. Pricewaterhouse has to transform the business. Got to be something else. Doesn't mean that they go out of business. It's just going to change the business. It could be system auditors. And banks are going to be focused more on the creative value-add services than the standardization. Of course, if you look 10 years ahead, 15, this entire side, the entire provider list, is going to be completely unrecognizable, or maybe they're going to disappear altogether. Which of course means that there's not going to be any middleman in the structure. There's not going to be enough fees here in the structure. Standardization means, of course, a lowering of fees. So where's the fees? Where's the value 10 years from now? Well, certainly not in inserting a straw as a middleman. You can't believe in a decentralized future, position yourself as a middleman, and make money as a middleman. You got to capture the value in something else. How do you then use a token to improve this platform? How is that platform going to look 10 years from now, and how are you going to capture the value? You got to make sure that you actually design a token that the audience and the stakeholders in the ecosystem would like to have. So it's like anything else. You got to give them a reason to actually want this by itself. And of course, if you run a hedge fund platform like we do, you want it to be a security. You can't really do the utility tokens. You need to have something that he can actually hold and buy. So number one, if you now follow the money and you use AKJ token to take you through this, you start with the security side of it. You got to be a security. And number two, you got to reduce velocity. So how do you reduce velocity? Well, you got to build in something else into a token that makes you want to hold it. So you got to serve certain utilities. You got to design that into a token, and that you can't really do in equity. You want it to pay you something while you hold it. You got to have a yield. And people, of course, in traditional space, they know how to value that and makes it easier. This is not Bitcoin. It's not a store of value. It's not a means of payment. It's ecosystem token. Security, reduce velocity, and basically pay a share out. So now, if you think the AKJ token, if you can follow the money through the system, so you can actually trace where there's value in the ecosystem. If you start with the token itself, we raise money in the token from different stakeholders for different purposes, and then we put the money down to AKJ Crypto. AKJ Crypto is the Asian company. Now, AKJ Crypto is owned by the founders. It owns 200 million tokens. So now you have an interest, of course, as a founder, to make sure that the token performs, because you have 200 million tokens. That's a lot of tokens. Now, since we're running a hedge fund platform, we don't raise money to get rich quick. We think long term. We are using a token to bootstrap the system. We actually put it out and move it into a fund of fund. The AKJ Digital Assets FoF, which was established in 2019, is basically serves as a bank in the ecosystem. So if you're the token holder up here, the return that you have in the fund of fund is being shared with you as a token holder. So the token holder, of course, sees his token as a synthetic unit of the fund of fund. Now, the fund of fund invests, in turn, the monies into the fund managers. If he can basically control his own fund in our ecosystem and get access to capital, then of course he'd rather be there. So now you achieved something important. You were able to attract the best fund managers to come onto the platform who's going to generate alpha. It's like any, if you build a business, what's important? Well, you got to have the best people. It's really important to have the best staff. And of course, if you run an ecosystem of hedge fund managers, that means that you also got to have the best fund managers with more sophisticated investors. That's how you're going to thrive if you think long term. Which of course means that AKJ Fund was the only fund last year who beat Bitcoin, and it's the best performing fund in the world according to Eurekahedge. Now, down here, if you think back to the discussion we had with the funds and the platform in traditional space, that is all down here on the platform itself. In order to be in the ecosystem and be a good platform participant, you have to own 2% of AKJ token. You don't have to, but we incentivize you to then participate in the ecosystem through the token. So that's the utilities. That's the reason I was talking about the velocity, reduce velocity by giving you a reason to own AKJ tokens. What's the reason for the fund manager? You get a discount in the system. You can enjoy the benefits from aggregation. If you don't hold a token, you still get a better structure, more safe structure, but you pay market rates. With this, you get a lower rates. So now that's a discounting mechanism. They buy it because it makes it less expensive to run your fund. That's why they own it. But they also have a second utility, is a key. And they see the token as a key to access the fund of fund for additional seed capital. So the fund manager doesn't really care about the valuation, or they're not buying it because it's going to go up in value. They buy it for the utilities, and then they tuck it away. For the token holder up here, he then benefits, of course, from also getting shares in the platform revenues, because this is still a business. So you still generate significant business, of course, from the fund level platforms. And then 25% of that is being shared with the token holder. So now you have two things. You have the fund of fund, which beats Bitcoin. And as icing on the cake, you have 25% of the revenues from the business that you really see in the traditional world. So as a token investor, why would you then only buy the fund of fund? Why would you buy any fund? Why would you only buy Bitcoin when you can have Bitcoin and any fund with additional of 25% of revenues shared to you as a token investor? Now, the third and perhaps most interesting part, which kind of shows decentralization, shows the power of decentralization, is of course the whole trading environment. We haven't really seen that yet, how it's going to change the industry. The financial industry is the reason it hasn't been disrupted because of regulations. So to a certain degree, it's probably easier to basically build a whole new financial business from scratch than to reform the old one. So, if you think like that in decentralization, we're going to start building it from scratch, and you look 10 years ahead, there's of course no margins, no revenues, no value to be had in providing services in a decentralized world 10 years from now. Exchanges are middlemen. Systems are middlemen. We don't know where the future is going to be. Nobody really knows what the market is going to be, so we got to maintain a fluent mindset. Now, the known unknowns in this, if you want to paraphrase Donald Rumsfeld, the known unknowns is that you're going to have DeFi components in the ecosystem. So new ways to finance funds, for example, new ways to provide liquidity or do staking, prime brokerage in the traditional space. But then you also have the unknown unknowns. All this stuff you don't think about today, but it's going to be there if you're going to reinvent the financial industry. Now, you're going to have periods here. It's not like all the fees are going to go to zero tomorrow. We're just going to be the lowest cost provider for a while. And we can do that because of the token. And we can use aggregation, things that you actually use in the traditional world. So that means, of course, as long as we are a tad lower cost than the next guy, there's going to be revenues also generated on the trading side. And then 25% of those revenues are going to be shared with the token investors again. So now you as a token investor, you will of course have the upside in the fund of fund. You have 25% of the traditional business for running the fund. And you also have 25% basically as a liquidity provider or exchange system provider, transaction side from the business that's being shared with you. Now it gets really interesting also from an investment perspective, helping, of course, to tie everything together. And the end goal here is to push pricing, be the driver to push pricing down all the way to nil, to zero. And then, of course, where are we then going to generate the money? Well, you're not going to have it on trading like you have in a traditional space. But if you think about it, if we then reduce cost to nil, and we have the most secure system for the investor protecting his capital, and we have the best providers who then own the token, so they capture the value in the token as well. That, of course, means we're going to be able to attract the best fund managers. We got the biggest ticket investors, which means they're going to go out and buy 2% in AKJ token, which means that AKJ token is going to appreciate in value. And that's how we then improve the enterprise model, by capturing the value in the token instead of in revenues.